In a nutshell, fundamentals is simply understanding the reasons why the market is moving rather than just identifying the moves that have happened. Now, when we understand why something is happening, we will have much more confidence in what we are doing, and if we can interpret what the market is thinking, then we have more potential in predicting which way the market will go next. For example, if there's a very good reason for the market to be scared, then the price will likely fall and vice versa. If there's a very good reason for the market to be confident, the market will be chasing profits. As you can tell, this will actually offer you a lot of areas to improve upon your trading performance. Now, in order to understand the concept fully, we are going to have to look at some of the most common objections that people have when it comes to trading the fundamentals as their main guide. Now, the first objection is that you only need to look at the charts, and that applying fundamentals is irrelevant and unnecessary. This is incorrect for several reasons. Technical analysis is like driving a car but only using the rear view mirror to navigate your journey. It will work sometimes, like on a really long straight road, but overall it's useless and you just wouldn't do it. Another point to consider is that all professional traders use very specific tools like the Bloomberg terminal or the Reuters icon. Now, these are very famous terminals which I'm sure all of you have heard of, and they are built specifically to get news and information to traders as fast and efficiently as possible. The cost of a Bloomberg terminal is around $2,000 per month, and it comes with a 2-year contract. So in order to have it, you basically have to spend $48,000 right off the bat. So why would the fundamental tools be so expensive if big funds and professionals made their money staring at price charts or indicators that can be found for free at most places? It just doesn't add up that this type of stuff is unnecessary when so many professionals are paying such high prices to get this type of information. The next objection that people have, particularly retail traders, is that fundamental trading is too hard and complicated to understand, unless you train at a bank or have some fancy degree. Again, by the end of this video, I will show you that the fundamentals is actually a lot simpler than technicals if you know what to focus on and what to look for. Another objection is that all news is already priced in. Now, this is related because understanding the news is a huge part of trading the fundamentals, and many so-called experts teach a belief of efficient market hypothesis, or EMH for short. EMH states that all available information is priced in and any moves in the market are totally random, and is therefore impossible to make a consistent profit over time. Now, in a very short illustration, I will demonstrate why this is complete nonsense and that anyone who believes this myth has never actually tried trading successfully. The example that I'm going to use is that of the Bank of Japan's quantitative easing program, which actually launched in April 2013. This program basically involves using unlimited printing of the Japanese yen in order to devalue the currency and encourage growth in the Japanese economy. Of course, according to the basic laws of supply and demand, when there is an oversupply of something, price falls, and this is true for currencies. So when the program was launched, there was a very high expectation from analysts and even from the central banks themselves that the value of the Japanese yen will fall over the following months. The overall expectation was that the pressure of this QE program would eventually lead to the currency falling all the way down to the 110 against the US dollar. Now, this is very well documented, but when the program was actually launched, the price did not fall that far for over a year. In fact, it actually took them 15 months for that piece of news to get fully priced into the market. Now, this allowed for traders to have plenty of opportunities to get in and take advantage of this news without being afraid of missing it on the first day. Now, there are many more examples. Even in short-term day trades, there are many times when news isn't fully priced in immediately. Now, this gives us a chance to see what's going on and get in to take advantage of these moves. Now, these tend to be the most common reservations that people have when approaching the fundamentals, but as we have shown, there's really no need to be concerned about these things because what I'm going to show you next will allow you to see for yourself how simple and powerful the fundamentals really are.